We all know Facebook. It's been around for a very long time right now, and many of you investors most likely also know Alibaba. Now, I don't know if you've been following the news lately, but both companies are currently being undervalued. Or are they not? And that is the question that I would like to discuss with you in today's video. My name is Lucas and I'm an investor from excelwealth.com. And if you have $10,000 laying around, the question is it a good idea to pump it in either of these two companies? Facebook, we all know them, including its own social media platform. It owns Instagram and WhatsApp, and it reaches 3.3 billion people every month again. But its stock trades at just 20 times forward earnings. Alibaba, on the other hand, serves 779 million shoppers in China annually, and it controls over 40% of the country's cloud market. But its stock trades at just 21 times forwards in earnings. Now, those valuations are low relatively to their projected growth rates. Analysts expect that Facebook's revenue and earnings rise to 25% and 13% this year. They expect Alibaba's revenue and earnings to jump to 51% and 37% in fiscal 2021, which ends already this month. Now, yet investors don't seem to be eager to buy either of these two stocks. Now, over the past 12 months, Facebook stock has risen about 30%, as Alibaba stock has climbed just over 20%. But both stocks underperformed the Nasdaq near 50% gain. Now, Facebook and Alibaba as well generated weaker returns than many of their peers in the social networking and in the Chinese tech market. To understand that, we need to take a look at what challenges these companies face. Now, the first challenge that both companies face is regulations. Facebook and Alibaba both face intense regulatory headwinds. Facebook faces antitrust probes in the US and Europe. It's clashing with regulators in Canada and Australia over proposed payments for the posted news stories. And a deadly Capitol riot in January sparked a serious concern about the platform's role in spreading misinformation and hate speech. And that is a very serious issue, because back in 2020, December, the Federal Trade Commission, the FTC, sued Facebook over its illegal monopolization over the social network marketing and proposed that they take distance from Instagram and WhatsApp. Now, on the other end, Alibaba faces regulatory pressure in both China and the US. China's antitrust regulators launched an antitrust probe into its e-commerce business last December to target its exclusive deals with merchants and promotional prices for its new users. Those regulators also halted the IPO of Alibaba's fintech affiliate Ant Group, which owns about 33% stake in it, due to additional antitrust concerns. But not only that, Alibaba's Taobao remains on a piracy blacklist in the US, and it narrowly avoided a proposed stock delisting in January over alleged ties to the Chinese military. A newly passed law will also require Alibaba and other Chinese firms to comply with tighter auditing standards over the next 3 years, or they'll be kicked from the US exchanges. Now, all these regulatory issues causes the market to become volatile. Now, all these regulatory issues are not a throat cutting, but uncertain impact of those regulations have kept many investors at bay. If Facebook is forced to spin off Instagram and WhatsApp, it would lose its main defense against high-growth niche players like Snapchat, Pinterest, and ByteDance TikTok. An interesting development is that also the company Apple is also planning to allow its users to opt out of its target ads in the upcoming iOS 14 update. That means that Facebook warns that also a change could also reduce the audience network ad revenue by more than 50%, and it's reportedly planning to sue Apple to halt the actual update. If Alibaba ends its exclusive deals with merchants and promotions, it could also lose its advantage against their two biggest e-commerce rivals, that is JD.com and 冰多多. So it generates all of its profits from its core commerce business, and a slowdown in a profit engine that would restrain its ability to expand its unprofitable cloud, a digital media, and the innovation initiative businesses. All that uncertainty has caused Facebook and Alibaba to significantly underperform their industry peers over the last 12 months. So, back to the question, if you have $10,000 laying around, is it either a good idea to actually invest in either of these stocks? Now, both these companies have faced regulatory challenges, and if those challenges did not bother them, and doesn't bother you right now, I'll tell you this, I believe that Alibaba is a more compelling investment than Facebook right now. Alibaba's core commerce business is still growing. Its cloud segment profitability is gradually improving, and its ecosystem continues to expand with fresh investments and acquisitions. And it also seems to face less competitive headwinds than Facebook is right now. Meanwhile, Facebook seems to be losing control of the platform it created back in the past. Its AI algorithms and outsourced sensors aren't helping the spread of misinformation on its own platform. And it is constantly in need to boost engagement rates between its users, and that is actually fueling its self-consuming blaze. So in this case, I would say as Facebook is trying to put out all those flames, other small social networks like Snapchat and Pinterest, they can actually just pull away more of its users as it regulatory tightens on the screws. I thank you very much for watching today's video. I'll see you in the next. Happy investing. Bye-bye.